Welcome, MMT Options Weekly Trader Expiration. That's what you're doing. And basically, you can see here on this candle, which is Apple. So let's introduce that back to the MMT here. That's an Apple 3-minute, and that's a teeny range. And you're right in the middle of it. Long, the bull to the breakout has risk. The bear for the breakdown, they have risk. They both have the equal weighted amount of risk. However, when you're buying wholesale on that 545 put that I had introduced in pre-market, and we have that live video series that will be matched to this one here at 10:40 a.m. Pacific Standard Time, 9/3/2012 calendar. What we would like to say is by removing the closing risk of $4.45 ratio and buying down here at that 45 penny level, 35 penny level, the limit orders that we had taken down in here now, and where the high was at 289. But most importantly is Apple is just ticking right there at the strike price in the MMT platform. And you can clearly see late intraday, weekly expiration now. There hasn't been yet a quick drawdown or a quick sell-off like there was in the Google trade from 611.90 down to 602.74 right there. And a 51 by 59 bid and ask over here with the sideways tape in the bid and ask of 545, 15 by 17 pennies. We can clearly see right here that the stock has not displayed its normal intraday pullback phase yet. So what I am saying here, and this is live, and of course it's right now, is that's how you trade a Friday weekly expiration, and it's live here. And our orders were given out ahead of time, long before they ever got here. And that was the truth. No one can deny that part of it. Before the fact, not after. When you are wholesale, you have removed the dollar cost risk ratio to entry. As you consolidate live intraday with no buyers or sellers, it's just a script, and you're at 0.30 ratio, that's got to fall down toward below 20 and go lower. 0.53 equal to 5.75 bull top, and currently trading at 3.21 at 4.71 teeny elevation. And there's your price script, and it's in the middle of the range, and so are you. But once again, you're at the wholesale bid over here. Your downside is limited, let's say, because of that dollar wholesale entry. You removed all the dollar risk to participate. It's the people that were on the put side up here at $2, $2.50, probably $2.20. They're all piled in on them. They've been piling in on them. You can see the volume right now, 32,803 contracts traded at 10:44 a.m. Pacific Standard Time, 3/9/2012, here and now. That's how many contracts have been traded with the public. Therefore, MMT, once again, there are very few people in the world who can master that wholesale bid, and that wholesale bid equals a very high level of risk management. Because of that lowest bid, your risk is very limited because of it. Why you consolidate through the move. Here we are, right back to that 545 call. We're still in that premium. We already own this premium at the low. We've got limit orders out at 25 pennies, learning how to get that 545 put at 25 pennies on the day, marked down from 4.45. Now on that other side, if this is going to break higher up out of that consolidation, what are we going to do? We're going to pop those 545 calls big. Maybe we get a couple dollars out of them. We'll let the market and the buyers and the sellers figure that out. But we are live. It is right now 11 o'clock a.m. Pacific Standard Time, 3/9/2012. SMF MMTs involved in weekly options expirations and enjoying the 545 call wholesale bid. All the premiums were marked down as masters to the wholesale bid on both sides. That means I'm wholesale here and I'm wholesale here. I have taken down my dollar cost capital risk. That means there's a dollar cost, there's a risk factor, and because of both sides being wholesale here and wholesale over here, I have reduced my risk. Yes, he's closed at $1.35. Yes, the high was $3.90. So, you know, my bid's at 25 pennies here is still wholesale. That would be a little over, that would be a dollar and some change markdown now. Close at $1.35. I'm bidding 25 pennies on that side, just in case if that thing. Now I'm already in this side down here at the wholesale bid. I took out on those contracts, 50 contracts, and you say $4. Well, do the math. How much did you save? Just wanted people to understand one thing, MMTs. When these bids start to get higher, that means that these bids are holding lower, 44 pennies. And once again, with the 3-minute, we've been going through this, it's a half a teeny movement. And that's how they whittle down the premium in both your 545 call right here, and you whittle the premium down from the 545 put here, from the high of 2.89 down to these wholesale bids here. So this side, once again, you're still wholesale here, and this side here's the 545. Well, it's trying to firm up in that bid. There it is. We're trying to get that low end 35 pennies right to that. We got that breakout. We're in these calls. Now, what he has to do, though, Apple's going to have to keep breaking harder through that resistance level to keep his call side of the market running. This is here. It's now. It's live. 11:10 a.m. Pacific Standard Time, 3/9/2012. We got bids out here at 15 pennies. Now, Mr. Plain, we got to get hit over here on this side of the market. It's there at that 20 pennies, and we'll sell the calls. This is going to have to keep breaking out, keep them calls moving now. And we got that perfect live entry right then and there. We had to get that side, but we got to keep looking at that low. We got bids at 15 cents. We got to keep this 3-minute hook. We got to keep that thing breaking higher. We got to get a full teeny breakout in order to get these down to 15 pennies. There it is, hit 20 pennies. Here, we still have high risk. They're not giving a lot of premium here. Here we go right now. We hit that 20 penny level. Look at them leverage it up. We're trying to get that bid. We were in pennies. It's still in that 50 contracts. This side of the market on the call side, it's heavy. It's weighted. We're not getting a continuation breakout. 32 by 34, they're not dropping that bid. We got our calls up to $1.04, right up there at a 54. That's where we have it. But you know what? In order to get the higher prices, this has got to go north of 65 now. And this has got to go north of 40 here, 0.34. We have to get a bar to grow, or we have to sell now into the strength. If we don't grow on the top of that reversal bar, you have to sell it now. Bam, I'm out. All right, I'm going to have to go over to the Google chart, but we sold our calls, and we're still trying to get these at 15 cents. So, once again, how to master playing on an options weekly 545 put, 545 call, bid and ask, wholesale. We sold out at that retail price. Now we're going to try to steal this bid at 15 pennies. I'm 360 by 410 over here. I'm going to have to go to that Google chart. That Google's going to come down. That bid is too close to that intraday low. I'm going to take these contracts at $600 call. I'm going to drop these down to $1.20 right now, just in case he breaks at 602.74. I'm going to conclude the Apple trade. It's here, it's live, it's weekly. Once again, we had the 545 put, we had the 545 call, we had the equity right here. We have a reversal bar on a 3-minute level. So the MMT, what they did was they got in down here where the breakout was, and they took advantage of it on a heavier volume size, and they came out and took their profits. So if you have 30 of these contracts and you get your dollar profit, that's $3,000 or 80 cents, whatever it is, 50 cents, it doesn't matter. What matters is that wholesale bid, they marked the 545 call down to the low. They marked this down to 20 cents where we've been covering it all day. We can see right now that Apple's printing at 545.65, and it's time to buy some of these puts down here. We have 15-cent bids. He hasn't brought it. He got close. We were within a nickel. So we're still striving to get in here in case there's a big reversal. You never know on an options expiration weekly live